And now, our weekly energy update with Dan McTeague, president of Canadians for Affordable Energy.
Nima, it's been a incredible week. Again, we've seen oil and gasoline prices and diesel all move up. Again, with two wars globally, with signs that perhaps there isn't going to be an interest rate increase, at least in the United States, possibly in Canada. It would appear that energy prices have nowhere to go but up. We note this week that the diesel inventories, which and gasoline inventories, which tend to build a little bit, are in fact decreasing. If we're to use the Energy Information Agency's data, that's from the United States Department of Energy, and it's a real telling example of just how tight the situation is getting. In the United States, the most important hub, at least it used to be, was the Cushing, Oklahoma hub, which was really the reference point for West Texas Intermediate oil, usually used for most of North America, with the exception of, say, the east coast of Canada. That reference place, that hub, if you will, has seen inventories of oil drop to levels not seen since 2014, so almost 9-10 years ago. And what is there in that hub, in those great depots, is probably oil that not everybody wants or can use. Emphasis now is really focusing on heavy oil. Who has it? We see the Biden administration may have given permission, released some sanctions on Venezuela to get as much as 200,000 barrels of oil a day for the next 6 months. It goes to show you just it's a sign really of just how this desperate the situation is for the production of oil products such as diesel, and in particular heating oils at this time of year when we're starting to see pressure on not just diesel prices but also on inventories, important for things like stove oil, furnace oil, and the like, especially in places like Eastern Canada and the United States. What that really means is that we're going to continue to see upward pressure on gas prices. That means that in Vancouver, the $1.85, I'm just looking at the price for $1.81, $1.82 that we're going to see this weekend, could move up about 3 or 4 cents a liter. The rest of the interior of BC, hard to make a broad brush because it ranges between $1.65 in Prince George, and you're down in Kelowna, $1.72 to $1.77. Those and Kamloops, those prices are likely to go up about another 4 cents a liter on average. Same for Alberta and Calgary within it, and Edmonton. They could see about a 3 cent increase, pushing back towards the low $1.40s. Saskatchewan remaining where it is in the $1.55 to $1.58 range, and same for Manitoba, holding as it is and has been for some time in the $1.55 to $1.58 vicinity. For Canada, the rest of Eastern Canada, Ontario, you're today paying on this Friday in the vicinity of about $1.56, $1.57. Look for those prices up about 3 cents a liter to $1.60, $1.61. Quebec always 12 cents more expensive, especially Montreal. So, they will be paying $1.72. While the Maritimes, interesting story. We've seen two provinces, both New Brunswick and Newfoundland drop gasoline prices, while Nova Scotia and PEI actually went up. You're going to see Newfoundland and likely New Brunswick by the end of the week, if not before the time to change gas prices on Thursdays and Fridays, maybe move up 4 or 5 cents a liter. It looks like the deep discount, based on their rather interesting formulas, I call it creative accounting, may actually be challenged, and they will probably have to raise prices, which of course brings into question the issue of premium gasoline on the East Coast. Only 6 cents a liter more expensive than regular. The market says it should be at least something like 16 or 17 cents a liter. So someone's taking a beating because of the regulated environment on premium. And so we'll see how that goes. It's been that for quite some time, but market prices are substantially higher for premium than they are for gasoline. I think for this week, Nima, all eyes have to be focused on what happens in Israel and Gaza. Should there be a full-scale invasion, as there is anticipated to be one, then I think that could set prices much higher beyond the resistance point of $90, $91 a barrel for WTI, $93, $94 for Brent, pushing oil potentially up to $95 to $97 a barrel, in which case we're looking at prices revisited that we haven't seen literally since September of 2022. For now, though, prices are slowly but surely heading back up. Nothing really crazy, but should there be more geopolitical pressure in the Middle East, all bets are off. Prices will definitely go up much higher than I think most of us would find comfortable. That's it for this week, Nima. We'll talk next week.
And that was Dan McTeague with our weekly energy update.